From Deloitte Tax and Legal Japan, welcome to the Japan Perspective. This is a podcast where we speak to specialists from across Deloitte to discuss the latest business issues impacting foreign multinational companies in Japan. I'm your host, Joanna Hazel. Today's guest, we are joined again by Nicole Baxter. And as a reminder, Nicole works on our indirect tax team with the team here at Deloitte in Tokyo. Today, we're going to be talking about the introduction of the taxation of online platforms on April 1st, 2025, as announced by the Ministry of Finance in the 2024 tax reform proposals. If you listened to our debrief geographical webinar series that happened earlier in February, you would be somewhat familiar with the proposed changes and some of today's discussion. But we promise that we do have some additional information and material to share with you all. So Nicole, thank you so much for joining us again. And before we get into the technical discussion, I thought for context, we could explain to our listeners why these rules are being introduced.
Thanks, Joanna, and thank you for having me back. So I guess as you're probably aware, the digital platform economy has really boomed in recent years. Online platforms have increasingly been acting as intermediaries between foreign suppliers of digital services and end consumers. In Japan alone, the growth of the digital market is so strong that in-app sales are expected to surpass 5 trillion yen this year. This sales channel is, we know, the preferred method for foreign digital service providers entering the Japan consumer market for the first time.
Wow, 5 trillion yen, that's quite the threshold. Can you kind of walk us through what the current rules are around this and how those are going to change?
Sure. So currently, under the JCT rules, the underlying foreign suppliers of digital services are generally obliged to collect and remit any JCT or consumption tax on their transactions to the tax authority. However, what we have seen is that many of these underlying foreign suppliers are often unaware of their obligations regarding consumption tax. But even when they recognize the requirements, it's often difficult in practice for them to actually become taxpayers and then to comply with their JCT responsibilities. So this, I guess, has resulted in a perceived inequality in the application of the consumption tax rules. And it's that inequality which the proposed new platform taxation rules aim to redress. So now under the new rules, it's actually the operator who's required to submit a JCT return to the tax authorities and remit the applicable tax on the facilitated digital services that are subject to JCT, in addition to remitting JCT on their own sales.
Got it. Thank you, Nicole, for that. So you mentioned a specified platform operator. Can you explain that a little further and who exactly are you referring to here?
Yes, so a specified platform operator will be designated as such by the tax authority if the total consideration for the facilitated digital services exceeds the 5 billion yen threshold, which is roughly about 34 million US dollars in a tax period. So from 1 April 2025, specified platform operators must disclose all facilitated sales amounts in their JCT returns.
Okay. Now, I'm wondering this, so I'm sure some of our listeners are wondering this as well, but how does a platform become a specified platform operator?
Yeah, so if the facilitated sales, which just to summarize again, are the total sales by all underlying foreign service providers through an online platform, exceeds that 5 billion yen threshold in the last tax period ending on or before 31 July this year, the platform operator would have to submit a notification to the tax authority by 30 September this year. And the platform would then be a designated specified platform operator by 31 December this year with an effective date of 1 April 2025, which is the date it must start collecting and remitting JCT on facilitated sales. Now, Joanna, to prevent platform operators from restructuring to avoid being designated as a specified platform operator, special measures for mergers and demergers are currently being proposed.
Okay, so it sounds like for any of our listeners out there who have fiscal year ends that are going to end on or before the 31st of July 2024, they should probably start thinking about whether or not these new platform taxation rules might apply to them. How about those taxpayers that have a fiscal year end that might be shorter than 12 months this year? What does the application and timeline of this rule look like for them?
Yeah, so their facilitated sales amounts must be prorated and the 12-month equivalent amount calculated. And then for subsequent tax periods, platform operators would have to assess whether their facilitated sales exceed the 5 billion yen threshold in the tax period. And if it does, they must notify the tax authority before the deadline of that relevant return for that period. And that's generally 2 months after the end of the tax period. And the designation would then take effect 6 months after the notification submission deadline.
So, surrounding this, will the NTA offer any kind of materials or publish information that gives details about specified platform operators to help our listeners with their compliance?
Yeah, so a list of all designated specified platform operators will be published by the tax authorities. Specified platform operators will also be required to notify foreign digital service suppliers of their status. And then once a specified platform operator has been designated as such, it will remain so unless its facilitated sales fall below the 5 billion threshold for 3 consecutive tax periods.
I see. Okay. So, in terms of how the specified platform operators will account for the underlying services, will Japan adopt, I think, what is called the deemed supplier model for this?
Yeah, so similar to other jurisdictions, Japan will implement this model. So, for those that are not familiar with this model, under the deemed supplier model, the platform operator is deemed to have purchased the service from the underlying service provider and is required to collect and remit indirect tax on the deemed onward supply to a final customer. This approach will also be adopted in Japan. However, the draft law does not actually mention how the platform operators must treat the deemed input JCT on the purchase side. It's likely that they won't be required to recognize deemed purchases of digital services from the underlying service provider, but we don't know yet.
I see. Okay. Well, Nicole, thank you so much for that overview and covering both technical and accounting side of this new rule. Before closing out this episode, are there any other points or topics you'd like to leave our listeners with?
So, yeah, I guess there's just two important points. So, just to reiterate, only B2C services are included. The consumption tax on cross border B2B or business to business sales of digital services that will continue to be collected through the reverse charge mechanism. And then secondly, platform operators are not required to remit consumption tax on sales of Japanese providers of B2C digital services. So that means that if you're a platform operator facilitating both domestic and foreign supplies of digital services, you will need to be able to distinguish between the two.
Thanks, Nicole. So, for my own summary and as a summary for our listeners, it's my understanding that basically, if you're a platform business operator facilitating the supply of B2C digital services for foreign enterprises, you'll need to assess whether you're likely to be treated as a specified platform operator and alternatively, if you are a foreign digital service provider making B2C sales through digital platforms and you receive consideration for those, you will also need to start planning for and thinking about these new platform taxation rules and if they'll impact you or not. Thank you again, Nicole, for joining us. It was so great to have you and chat with you again. And Nicole and her team have also written a newsletter on this platform taxation topic. So please keep your eye on our platforms for this newsletter. If you have any questions or would like to reach out, please feel free to contact either of us on LinkedIn. Thank you for listening, and we'll see you next time.